Let's get more on this now with Farah Mourad in Dubai. She's a senior market analyst at Equiti Group. Good to have you with us, Farah. Now, we're seeing the dollar and US equities tank. Does this indicate that investors have lost confidence in the US economy, or is it just a short-term reaction?
Thank you, Taiba, for having me. And it's a weird thing to see, by the way. Usually we either see US dollar being supported, pressuring other US assets such as the stock market, or the other way around. Now, is it a long-term trend or a short-term reaction? I would say it's a mix of both. We're not seeing a total loss of confidence in US assets yet. I think it's a tactical retreat at the moment. Markets are pricing a shift of interest rate policy, global inflation as well, this trade war also continuation. So I think it's more a hedge against high volatility, more than a total abandoning of US assets. But if this trend continues, then we might see it shifting into something more structural, yes.
Right, and let's look at gold prices now. You previously mentioned that you expect it to hit as high as $5,000 this year. How soon do you see that happening?
It really all depends on the current dynamics and how they will accelerate. The main things we need to check the de-dollarization trend. Also the capital shifting from sovereign debt into hard assets. This kind of debate between the federal bank and Donald Trump, how it will affect interest rate policies. It is possible to see it mid-year in case all these dynamics continue to accelerate. In extreme fear scenarios, you might even see the 5,000, but at the moment 4,000 seem more possible with the current dynamics. We need to remember as well, the main thing is in case we see real yields going back into the negative territory again, that's something that would give us another signal that gold might be supported. We need to remember the current trend, the cornerstone of it is the demand of central banks. Retails are only catching up.
Now, the IMF and World Bank spring meetings are taking place at the moment with a special focus on trade tensions. Do you expect the IMF to downgrade its outlook for this year?
It's definitely possible. I mean, we saw also a downgrade in January from 3% of possible global growth to 2.2%. Given the pressure that we might see on transportation, on supply chain, on maybe even commodities, yes, it's possible to see also a downgrade. I don't think it's going to be a huge or maybe like a dramatic change of outlook. Maybe we might see it lower to 2%, 1.8%, nothing dramatic, but something clear enough to highlight the effect of the current trade tariff and the supply chain changes on the global economy.
Right. Farah Mourad, Senior Market Analyst at Equiti Group. Thank you very much for your insights.
Thank you for having me.